Hello, today is Thursday, June 11th, 2026. Here is your daily signal. According to Fortune, Gulf states are ramping up AI and automation investments and racing to become global leaders in the field. The region is leveraging these advanced technologies not only to diversify away from oil but also to drive digital transformation. Background initiatives include the UAE's National AI Strategy, started in 2017, and Saudi Arabia's Vision 2030, launched in 2016 with the goal of reskilling the workforce amid sweeping technological change. Robotics adoption is reshaping labor in key manufacturing and logistics sectors across the GCC. Key players such as the Saudi Data and Artificial Intelligence Authority SDA, Aramco, Emirates Group, and research institutions like Khalifa University and COST are at the forefront of integrating automation and AI into operations. Recent developments include Saudi Data and Artificial Intelligence Authority's partnership with Google Cloud, launching AI training for 2,000 Saudi professionals, Emirates Group introducing automated baggage robots at Dubai International Airport to cut manual labor by 20% by Q3 2026, and Qatar Foundation collaborating with MIT on AI projects for industry. As a consequence, thousands of Gulf workers will need reskilling, with government initiatives aiming to boost digital literacy even as unemployment risks rise in low-skilled sectors. In the medium term, high-skilled job opportunities will expand but potential skill gaps could widen. Growing innovation hubs and international tech partnerships may attract global talent, positioning the Gulf region as a competitive force in the AI market. Next, onto the financial ripple effects of the SpaceX IPO. Fortune reports that the SpaceX IPO is expected to deliver a significant financial windfall to Gulf sovereign wealth funds, offering a timely boost to their portfolios. SpaceX, founded by Elon Musk, is preparing its initial public offering targeting valuation between $1.7 trillion and $1.8 trillion in 2026, with the IPO filing in May and a Nasdaq listing as soon as June under the ticker SPCX. The Gulf region is no stranger to landmark IPOs, as seen in the 2019 Saudi Aramco offering, which raised $25.6 billion. Now, Saudi Arabia's Public Investment Fund, Qatar Investment Authority, Kuwait Investment Authority, Mubadala, and Oman Investment Authority are lining up to purchase shares, potentially amassing $17 billion in combined stakes. Prince Al-Walid bin Tal's Kingdom Holding currently holds a $4.5 billion SpaceX stake. Saudi Arabia's PIF is negotiating a $5 B anchor commitment, aiming for a $75 B raise at IPO pricing, setting a new global record. Demand from Gulf funds is so high that orders exceed available shares ahead of the debut. Short-term, Gulf investors could gain substantial influence over SpaceX's strategy and revenue priorities. This heavy ownership may prompt regulatory reviews in the U.S., due to SpaceX's national security contracts, and potentially lead to congressional investigation. The IPO is likely to crystallize Gulf wealth in tech and AI, while increasing geopolitical tensions amid current regional conflict. Medium term, more Gulf control of satellite and AI infrastructure could shift global tech alliances and capital flows. Turning now to new ways startups are winning investment outside traditional VC structures. TechCrunch highlights that entrepreneurs like Justin Earnest are pioneering innovative investment methods for startups, bypassing the classic venture capital fund structure. Startup ecosystems are embracing alternatives such as crowdfunding, revenue-based financing, and tokenization to diversify access to funding, fueled in part by recent economic uncertainty. Platforms including AngelList, Republic, and Seed Invest, as well as accelerators like Y Combinator and Techstars, are experimenting with flexible investment vehicles. Influential figures such as Naval Ravikant champion these models, while regulators in the US and EU are evolving rules to accommodate them. Recent milestones include Seed Invest announcing a $50 M crowdfunding round for tech startups, AngelList launching a blockchain-based syndicate investment platform, and Y Combinator unveiling a revenue-sharing investment model, each signaling a pivot away from equity-only funding. The immediate effect is faster funding cycles and reduced reliance on traditional VCs. As public participation grows, regulatory scrutiny will likely intensify, and global inclusion may widen, although questions about transparency and accountability are emerging. Now, we'll continue tracking how these alternative approaches reshape startup investment. Now, onto the markets. International equities broadly weakened, with Germany's EWG down nearly 1.8% since yesterday and Japan's EWJ dropping over 1.8% in daily trading. Notably, Taiwan's EWT saw a sharper fall of 2.8% day over day, while Indonesia's IDX posted a gain of 3.1%, the only notable winner across regions. Commodities traded mixed. Gold GLD dropped more than 4% on the day, with uranium URA and platinum PPLT also fallen sharply, but U.S. oil USO advanced 2.3% and natural gas UNG rose 1.3%. In U.S. sectors, the S&P 500 SPY declined 1.5%, semiconductors stocks lost 3.7%, and aerospace ITA shed 2.4%, while healthcare Roman 45 slipped 1.1% even as finance XLF remained nearly flat. Among favorites, large techs like NVIDIA led declines at -3.7%, Microsoft MSFT slipped 1.5%, and Amazon fell by 2.5%. ARM remained volatile, dropping 5.4% daily but showing exceptional month-over-month growth, while Marvell MRVL slid 5.3% but rallied over 53.5% for the month. That's it for today. You can find more news and details on our website. Goodbye.